Okie dokie. Good day, everybody. This is James of MarketsAware bringing you your daily insight on the 3rd of August 2016. With love and care, as always, as I've said, from MarketsAware. Today we're having a quick look at possibly the calm before the storm, as well as looking at a little bit of fear, which we can now see really creeping into the market. So just do a quick recap on the week ahead. As we already know from yesterday, we had the ADP today, 168,000 is the expectation, medium impact. Then, of course, and we'll talk again a little bit more about this, because this is really, to be fair, one of the big stories this week is, of course, the Bank of England base rate decision, 11 p.m. GMT, guys. That's tomorrow, 11 p.m. GMT. Put that in your diary. And let's have a see if they do indeed cut rates to 0.25. We know what to watch: cable, euro sterling, and gold. And we'll talk a little bit more about gold again in a bit. Carnage, as I've mentioned, is actually, well, that's actually 11:30, not 11 o'clock. My mistake there. Carnage is talking at 11:30 p.m. GMT. Again, we need to really keep an eye on what Mr. Carney says. High importance once again. Followed, of course, on Friday, August the 5th, 12:30 is the non-farm payroll. 175,000 is the expectation, down slightly from 257 from the previous month. High importance. Again, we'll need to keep an eye on the dollar versus the majors, gold, and look at the equities. And we're talking about the equities a little bit in a second. At the same time, on the 5th of August at 12:30 p.m. GMT, we have the US unemployment rate. Again, it's supposed to stay the same at 4.9%. High importance, but really everybody's been watching the NFP on Friday. So, as I mentioned, we've had actually during this session, a lot of fear seems to be creeping into the market. In fact, during the European session, a good number of the equities appear to be running slightly scared. The cable, the pound versus the dollar, it has consolidated its gains ahead of tomorrow's Bank of England base rate decision, despite a very disappointing PMI announcement today. The Japanese yen is also getting a lot of attention from traders as the market is now looking towards safe havens. It is really underlining the fact that the market seems to be extremely fearful at the moment. And gold is getting close again to that 3-year high. Some analysts are actually now predicting a strong finish for gold this year, with even the $1,500 level, $1,500 level being talked about. Again, I'll go to a little bit more detail on that in a moment. As it currently stands, we have the S&P 500. Now it looks to finally broken away from that tight range. Remember, we were stuck for a good couple of sessions between these levels. Because of the fear and the concern in the market, we've now seen it actually drop just below the minor initial support, according to the Bollinger on the daily, of 215.880. Okay, so it has slipped underneath that. The next current support, according to the Bollinger band on a daily, next potential support is at 2.12218. Of course, NFP is something to be keeping an eye on, but really in general we need to keep an eye on the equities and indices across the globe, because there does seem to be a little bit of fear creeping in. Moving on to the FTSE has actually got a similar pattern to the S&P. It actually dropped now below the initial support of 6.68160. Again, this is on a daily, and that's again according to the Bollinger. There is a next potential support, according to the Bollinger, at 6.580.03. Second potential support, according to the simple moving average, is at 6.412.72. However, remember, if it remains above the SMA, it is sort of still showing a slightly uptrend. But really, to be fair, you know, all eyes are really going to be on the Bank of England tomorrow and what Carnage says. If, like I say, depending what is said and what is actually acted, the market might see it as encouragement or actually proactive. The Bolly shows a potential resistance at 6.68160. And while we're on the FTSE, the UK, Bank of England, let's have a quick look at the cable. This is on a 4-hour chart, so we're only looking at some short-term noise here. Short-term noise before the Bank of England. like I say, the sterling has recovered from the poor PMI, which actually has indicated or shown the impact of the brick exit. I know I talk about the brick exit a lot, but I feel very strongly about it. But anyway, it has actually shown the impact. In fact, the drop in the PMI is the sharpest drop since 2009. So there is a lot of concern. But despite that, like I mentioned, the cable has recovered. The Bollinger on the 4-hour is showing a potential resistance now at 1.33672 and a potential support on a 4-hour at 1.32478. But okay, you know, it is realistically all about the Bank of England tomorrow. So any of the short-term traders here, you know, keep ear and be mindful of any hints or rumors leading up to Bank of England's base rate decision tomorrow. So that's something to keep an ear out for. Moving on, let's talk a little bit about safe havens, people. Let's talk about safe havens. As I mentioned, the yen is getting an awful lot of attention at the moment because don't forget, guys and ladies, of course, the yen is regarded as a safe haven. We are seeing some yen strength against the dollar. We saw that after obviously the FOMC last week, but it's now gaining even more momentum. This is on a daily chart we're looking at here. According to the Bollinger, the potential resistance is at 103.997. And there is a potential standard simple moving average resistance at 104.921. Again, guys, below that, it is actually indicating a downtrend for the dollar Japanese yen. The Bollinger on a daily is showing a potential support now at 99.9166. So really, we need to keep a very close eye on the NFP, see if it disappoints. If it does disappoint, then potentially we could see that support at 99.9167 being tested. So we really need to keep an eye on the NFP. But of course, Bank of England, don't discredit that. We need to keep an eye and see how the markets reacts to that. So the yen could actually then see more of an influx, more of a rush of traders rushing in as they look to try and buy up some safe havens. And as we're talking about safe havens, we could not possibly not talk about gold. Gold is still actually continuing its momentum. This is on the monthly. As I mentioned yesterday, the potential Fibonacci resistance levels remain at $1,380.26, followed by a potential second Fibonacci resistance level at $1,483.46. Okay. Both at 38.2% and 50% on the Fibonacci retracement levels, respectively. Okay, but as I mentioned, now because of this build-up, because of the FOMC last week, because there is now the market's actually thinking that the US won't raise interest rates, certainly in the near term. They're even questioning now maybe it might even happen in September. With that, with the US election. Plus, there's signs there's an increase in demand in China for buying up physical gold, fear in the global economy, cats and dogs living together, etc., Brexit, you name it. Some analysts are actually now predicting that gold could indeed hit $1,500 by the end of 2016. Okay, we have some key levels still to break, like I say, before we can even think about that level. $1,380.26 first, and there goes $1,483.46 first. Those are the two key on the monthly Fibonacci retracement levels. But like I say, there is slowly building momentum. A lot of chat that this could be a good year for gold. So we'll have to keep a very close eye. In fact, in the next day or so, I will do a special video and update purely on the yellow metal. And we'll look at the whole picture a little bit in more detail. So keep an eye on that in the next day or so. And as I always say, that's a wrap for now. Remember, ladies and gentlemen, this is no way whatsoever ever to be taken as advice. It's purely for informative purposes only. Special thanks again, as always, to NetDania. This is James from MarketsAware. You trade safe.